On this episode, let's dive in and talk about two movements that aren't always bundled together in the same sentence. One of them is the FIRE movement, or financial independence and retire early, and the other is Bitcoin. This episode's guest, Trey Sellers, is really leading the online conversation around how people can find financial independence, even retire early, and use Bitcoin as the vehicle to do so. I'm Jarrett Carpenter, and this is Future Signal. Trey, how you doing? Thanks for hopping on the pod.
Hey, Jarrett. I'm doing well. How are you?
I am well. We've come all the way from a DM on X to now we're recording, and I'm excited to share this episode with the world.
It's funny how that works, right? You start talking about Bitcoin, and Bitcoiners want to reach out. It's great.
That's so much. I'm actually in a professional moment where I'm trying to move all my professional relationships, and this feels like a professional relationship. I'm sure maybe we'll meet one day and then it will be more like a friendship, but most of my relationships, because most of my friendships are already on text and they're in chats and they're, I'm trying to move all my professional relationships just to DMs on X, Telegram, or WhatsApp, because email is just like a black hole of nothing that I don't get productivity done. Anyways, that's an aside. So the fact that we met on X for me is a wonderful thing. I didn't ask you before we recorded, and I don't know if you're willing to share, but where are you located out of?
I'm just outside of Atlanta.
Oh, really? Okay. Cool.
Yeah.
Cool.
Been here about 11 years now, I think. Grew up in the Midwest in Southwest Indiana. Lived in New York in the city for about a year, and then bought a condo in Jersey City. Lived right on the waterfront. I was working in the city and around that area in the various jobs that I had around that time. And then, when my wife and I wanted to have kids, we decided we didn't want to do it in that area of the country and looked to move south, and for whatever reason ended up in Atlanta, job opportunity and that kind of thing. So we love it here. It's great.
Atlanta's one of the probably most slept on major cities of the United States. I think when like foreigners think about it, because I live half or if not 60% of my year in South America in Colombia.
Oh, okay.
And Colombians, when they come to the US, they go to Miami, they go to New York City, and that's almost it. I'm sure like every once in a while one will go to LA, right? But like people sleep on Atlanta all the time, and there's a direct flight between Bogota and Atlanta, and it's only like 3 hours, 3.5. So
I don't know that it's really sleeping on Atlanta. Atlanta is not really that much of a destination for people. There's not all that much to do just coming to Atlanta as like a visitor, but it's a great place to live. So that's kind of,
I guess that's what I meant. When as a visitor, no, but as like a place to live that has vibrant culture and like a good situation going on as far as housing affordability, food,
the weather's nice and the food is great, and there's sports and whatever else. Like you can find whatever you need to in the Atlanta area. It's great, and you can get anywhere you need to from the airport. So people hate on the Atlanta airport. But that's because they don't live here.
I'm one of those people.
Great, but if you have to connect through, it can be a bit of a pain.
I am one of those people, the way the airport's laid out. But anyways, let's get into what we want to talk about today. We just were talking about your stint in New York City, and that is back when you had different hats on. Today you have the Bitcoin hat on, you have the Unchained hat on, you have other hats. But let's actually go back, because I think it's really important to give that foundational base as, to like where you were. So you were working at Goldman Sachs. You were, I don't know if there's more TradFi than that. I mean, that just sounds like, fleece vests and lattes, right? On Fifth Ave or wherever their building is. Talk to me about that transition and the moment where you went from TradFi, and then I'm assuming you somehow slammed into Bitcoin, as most people do. It's like hitting a brick wall of like philosophy, and what that transition looked like.
Yeah, well, I came into the working world more on the technology side of things, and my first job was at Deloitte Consulting in the technology practice, and so I was doing quite a bit of travel and that kind of thing in that role, but I always had an interest in financial services and banking and that kind of thing, and so that's where I focused my efforts while I was at Deloitte. And so I was working with various clients who were in the financial services industry or banks, in and around the New York area. And then I found the role at Goldman, and Goldman is definitely kind of upper echelon of the traditional finance world and banking world, and it was certainly a great experience. It's obviously a good thing to have on your resume, especially if you want to stay in that TradFi world. And so I got a lot out of that. Met some really intelligent people, and I was there I was there during the time frame after the financial crisis, but when the Fed really was playing still in the spotlight on a day-to-day basis. Not that they aren't now, but they were starting down all these weird monetary experiments, things that really only Japan had been doing with quantitative easing and Operation Twist and like all of these new facilities and approaches to try to pull the economy out of the quagmire that it was in after the 2008 financial crisis. So it was a very interesting time to be on Wall Street and be, having conversations around what is going on in the economy and what is the Fed going to do and all of that. I first found Bitcoin in 2014, that's when I first started buying it. But I do have this memory of hearing about Bitcoin for the first time while I was at Goldman. I'll try to paint the picture for you. There was a gym in the building, and after work one day, I was in the gym. I was listening to a kind of internet pirate radio show, which may still be on, called Free Talk Live. Is out of the New Hampshire Free State Project. And, they're just riffing on libertarian type topics, which is kind of how I found, that was my foray into Bitcoin, was learning about it through those channels. And I was a big Ron Paul fan back in '08 and during that election and that kind of thing. And I remember having the bar on my back, squatting. I was in the squat rack and listening to Free Talk Live and them talking about Bitcoin. And I think the price was somewhere around $10 or something at the time. So just like hugely early. And my initial thought was, oh, sounds kind of cool. Libertarian money. That sounds like something I would like. But I never really took it any further than that, unfortunately. It obviously would have been very difficult to buy back then in 2011. But it sure as hell would have been worth my effort if I had really understood what I was listening to and understood what the prospects were. So fast forward to 2014, I started buying some Bitcoin when it was easier to do on Coinbase. Coinbase had been, I think, came out and started operating in 2013. So they'd been around for a little bit of time. And at that point, you could actually just connect your bank account to Coinbase and make purchases. So I was doing that, purchases once a month or something like that. But I still didn't really know what I was buying and still was not really convicted in it. Until call it 2017, 2018. After Goldman, I went to MetLife. I was there for about a year and a half doing some internal management consulting type work. And then when we moved to Atlanta, like we were just talking about, I found a role at SunTrust in the capital markets business. I was sitting on the trading floor. I was sitting, in the trade flows, doing like risk and P&L work for the traders, working with the heads of the desks for understanding the risk metrics and that kind of thing. At that point, I kind of just found the right people. It was maybe 2018, 2019. I was finding the right people on X and or Twitter at the time, and that got me fully convicted. And at that point, I started like actually dollar cost averaging, actually starting to allocate some more capital to Bitcoin. And I became the Bitcoin guy at the bank at SunTrust, which then became Truist after a merger with BB&T. And so, I had this like traditional finance lens that I think is very unique and valuable in the Bitcoin world, but also with this understanding of Bitcoin as money. And I just thought, look, people are going to start asking questions about what's going on. We were heading into the 2020 halving, and I was like very convinced that we were going to see the type of pump that we did ultimately see, and that people would be curious, right? And so who better than me, who actually understands this, probably better than anybody else in the entire bank. It was a big bank at the time, right? Like Truist at one point was like the 6th largest bank in the US. So we're talking about some serious size there. And so I was that guy who was answering questions. I was giving presentations around. I was asked to join a working group that was put together by the board with some very senior executives to understand the landscape of crypto. And I was brought in as the Bitcoin subject matter expert. I had a little mailing list internal to the company that people would just reach out to me randomly to say, hey, can I get on your list? And I was just, giving updates on what had happened the previous week and a couple little tidbits about my thoughts on it. So that snowballed into an actual opportunity to work in Bitcoin at Unchained. And I've been at Unchained ever since. It's been 4 years now. I left banking in the TradFi world in August of 2021. So yeah, it's been a little over 4 years.
That is quite the journey. And I think that journey resonates with most Bitcoiners that I talk to, and myself included, which is like you learned about it at a moment, right? You said you were doing squats in 2011, then in 2014. So let's say that's 3 years for easy math. About 3 years later, you start actually buying some on Coinbase. And then it was about 3 years after that where you started taking it a little bit more seriously, and then you also met the right people. I have a very similar thing. 2014 is when I first heard about it, and I was at grad school at the New School in New York City, and I just started making jokes about it. It was like a joke. I like heard about it. I was like, that's not gonna work, and I would just make jokes. Whenever we'd go out, I'd be like, hey, like credit card, unless you take Bitcoin, and people would get a laugh. And Bitcoin was like $280. Shame on me. And then in 2017, I bought my first little amount of Bitcoin, but I wasn't fully convicted. I just like bought a little bit. I was like, this is kind of fun. This is cool. I see how this fits in. But then 2020 Bitcoin standard, I see that that's on the shelf up there. Shout out Saifedean.
Yeah.
Then I was like down. I was down the hole. I was like, okay, this is going to happen. I see how this is going to happen. So I
It's
actually
funny that
also,
you said $280. I think if I remember correctly, I think that's the lowest purchase that I ever made was 280. Back in 2014, 2015 era, like the price was anywhere between that level and like 600, 650 or something like that, right? So
yeah, in my mind it was 300 to 600. So
I was kind of buying, all through that area, and it was small purchases, right? Like don't I'm no Max Kaiser.
You're no Max Kaiser, but still, that's a flex. Most people, so I get to talk to you, right? I have you on the podcast, and we are going to get into our main topic here. If people are waiting, right? I do want to talk about FIRE and Bitcoin and how the relationship happens, because that's something I think more and more people are waking up to, especially younger generations. But with what you've just said, talking to someone, for me right now, I'm talking to you, who's bought under $1,000, super flex, right? But for you, when you talk to someone who's Max Kaiser who is buying under $10, major flex. And this next, like when I think we can get into price a little bit, but when I think we go to $250,000, if you bought under $10,000, right, you're just going to keep adding zeros onto the flex, right?
Yeah,
and then
sure.
eventually it's going to be, oh my gosh, you bought under $100,000. Oh my gosh, and
Absolutely. Yeah, I
and
mean
that's
it really is so early still, but it's hard to maintain that perspective sometimes when you have been around for as long as I have, and you've gone through all these different cycles, and we're going through a very weird time in the market where the price is just kind of not reflecting the fundamentals in the way that I think a lot of us think it should. And so, Bitcoin will always find a way to test your mettle and test your patience, and it will always do the most unexpected thing to
yeah,
keep people on
we're
their
in the part of
toes.
the timeline where we all just need to do nothing for long periods of time and feel productive, which is really hard for human beings to do.
Yeah, I posted that the other day. I said on X, the post was, "You can just do nothing," right?
That's it.
You can just do nothing.
Bitcoin. You found Bitcoin. Now, I've listened to you on a couple other podcasts, and it sounds like I want to try to decipher the chicken and the egg, right? Because one of the things I do want to talk about, yes, Bitcoin, but I also want to talk about the FIRE movement or financial independence. And it sounds like on many of the episodes that you've been on and that I was listening to, that basically the chicken and the egg came really, really quickly. It was like you found Bitcoin and then you fell into FIRE, or it was either that you like were on the FIRE because you and your wife were making decent money, you were already starting to stack stocks, you saw the value in saving for the future, buying future time. Talk to me about that relationship and that timeline, because now we know your Bitcoin timeline.
Yeah, the fire timeline happened around the same time as I was starting to actually develop real conviction in Bitcoin. And, you know, I had already been fully bought into the fire methodology, which for the uninitiated or people who haven't heard about this, basically what we're talking about here is a intentional way to structure your personal finances such that you are aiming to reach a state of financial independence at a very early age. And, I had a great career in the TradFi world, but it's not like I was super excited every day rolling into work and dealing with the traffic and all the meetings and the expectations of that job sitting like on that trading floor is exciting at some points, but other points it's kind of a grind. And I think a lot of people really feel that their job is just something that it's a necessary evil. They're not really excited about the work that they're doing. And there's always something else you would rather be doing, whether it's hanging out with your friends or family or your kids or traveling or playing golf or doing whatever. Or if we're just talking about work, like go work on something that you're passionate about, right? And so the FIRE community and the FIRE approach is, well, let's use the fiat financial mechanics to our advantage. And of course, they don't talk in those terms because they don't understand the intricate details of how all this stuff works, but they do react to it in a very rational way, which is let's be extremely intentional about the expenses that we have, the spending that we do, and keep that to the lowest level possible. Some people take that to an absolute extreme, which I don't really advocate for, but you should know where your dollars are going and be very intentional about the value that you're getting out of the spending that you're doing, so that you're not just spending money frivolously and wasting what is otherwise an opportunity to stack assets. And probably the primary vehicle for investing, as they call it, which I think is more just a saving function. We can get into the nuance there, but the primary vehicle that the FIRE community is using is stock market index funds. Like it could be something like the S&P 500, or it could be total stock market index funds, like something like VTI, which is a Vanguard total stock market index. And it basically is buying literally every company that is out there on the public markets, so that you have very broad diversification there, and you're not trying to beat the market. You're just trying to get the market returns, which historically speaking has been anywhere from 8 to 12% over the last 100 plus years, at least in the US. And by doing that, by being very intentional and by stacking assets, stocks, as quickly as possible, you can start to develop a portfolio that works for you and getting compounding on your side, such that the value of that portfolio can actually support all of the expenses that you have. And when you reach that level, then you are financially independent. You don't need your job anymore because your portfolio supports all of the expenses, all of the spending that you have. It supports the mortgage that you have. It supports your car payments. It supports the education that you're giving your kids. It supports the groceries, all of these things, right? And that is hugely freeing, because now all of a sudden you don't have to be in a position where you are beholden to a job and a schedule that you don't like, or a boss that makes you mad every day, or the coworkers that are rubbing you the wrong way, or whatever, right? And you can then take that time, if you so choose, and point it in a different direction. So that could be that travel, or it could be playing golf, or it could be working on passion projects, or building a business, or whatever you want to do. And you can do whatever you want to do because you don't have to rely on an income anymore. You are financially free. And if you do that in a much earlier time in life, you've got all the time in the world to try a whole bunch of different things, right? So, the traditional way of approaching personal finance is, okay, I go to school, I get a job, and I work for 40 years, and maybe I save in some retirement accounts, or I have a pension fund, or there's Social Security, but that's it, right? And then I'll retire at 65, and then hopefully I live another 20 years, maybe not. Hopefully I live another 20 years and I can play golf then, and I can enjoy my wealth then. But the FIRE community rejects that, right? Like we say, no. There's no reason you have to work for 40 years and in a job that you don't like, and then retire only when you are too old to actually fully enjoy it. Why don't we pull that retirement date forward? And you can do that if you take this intentional approach. And once I saw this as a possibility, it really opened my mind to this being something that's actually very achievable, and it's something that you can graduate toward over time, in a very intentional way. And so it gives you a plan, gives you like a structure to say, okay, my job is not working as a banker anymore. or my job is not an electrician. That's the work that I do. My job is to figure out how to turn my work into assets that will work for me. And so when you make that switch, you can start to kind of see the light at the end of the tunnel. And what happens is that you take this very low time preference view, which, by the way, is something that Bitcoiners kind of naturally intuit. And then you just start chipping away. And the faster and the more that you save and invest, the faster you will reach that goal of having your balance sheet do all of the heavy lifting for you so that you can go off and do whatever you want. So when I realized that, I put that plan in motion and I started stacking stocks. But then I found Bitcoin, like really found Bitcoin. And then there was one day where I just had the realization that, well, stocks are great, but Bitcoin is way better, right? It's the apex predator of all financial assets. I should just be stacking sats instead of stacking stocks. So from that point on, I just pivoted completely. All future like savings capital that was available went toward Bitcoin, and never looked back. And what happened was, because of Bitcoin's power as a growth asset, because it's being adopted in the way that it is, because of the performance that it's had, that very much accelerated my path toward financial independence, such that, in the traditional FIRE methodology, call it 10 to 15 years, I would say for most people. This was like in 5. And that's a lot more exciting. It's a lot better to have those extra, 5 or 10 years of your life available to do whatever you want to do. So anyway, that's the journey and how the Bitcoin and the FIRE thing kind of melded together.
In your journey, so in my journey, my FIRE journey, I met someone who is financially independent. And for everyone listening, if you're not sure, what we keep saying FIRE is financial independence, retire early is what the acronym stands for. But a lot of people just say FI. Financial independence doesn't necessarily mean that you retire early, because I know retirement has all these like potential stigmas and negative things. It just means, I just tell people, it just means that you get to live every day, Monday through Friday, like it's the weekend. So what do you do on your weekend? Okay, well, you get to do more of that, right? I met someone who has, probably late 20s, early 30s, was financially independent and then gets to do whatever they want. So for me, it was like, oh man, seeing is truly believing here. Because I think sometimes when you philosophically share these ideas with people, they're like, oh, okay, whatever. Like, that guy's crazy. Like, did you hear Trey talking at dinner the other night? Like, wow, he had too much to drink or something like that. When, for you and like in your community, how do people react when you talk about FI, first of all, and then that you're on the FI path, or maybe you already are FI, but you're still choosing, obviously, to support Unchained, and then that Bitcoin is the train or the vehicle in which is taking you or has already brought you to the station?
I think a lot of people just don't really think very intentionally about what their personal financial situation is. I think a lot of people just go through the motions. That's certainly what I was doing before I found the FIRE framework and started to put that into practice. And, when you've got a job in corporate America, at least, it typically comes with a 401k. And so some of that savings is a little bit automated for you. And it's just not something that you necessarily need to think about. And when the topic comes up, I think people are surprised at hearing that this is something that's actually possible, right? That there is this kind of alternative path that is available to people if they would only recognize it and just take some steps to kind of rearrange their approach to match it. And then, talking about Bitcoin, I don't know, I am obviously well known as a Bitcoin guy, and that I work in Bitcoin. So at this point, it's like something that everybody knows, and that is the reality there. I don't really try to push any of that on people, though, right? It's like something that you have to come to on your own time and your own terms. Of course, I'm available for people if they have got questions, and typically when the price is pumping, as it does, it garners a little bit more attention. And that's when more of those questions come. So there certainly are a lot of my friends and family members or whatever who have come around to at least having a Bitcoin allocation just through the longevity of knowing me and having those opportunities to ask me those questions. And at a certain point, everybody bends the knee. Everybody just recognizes like, okay, maybe I should have a little bit of this just in case, right? Just in case it catches on, as Satoshi, so eloquently put it all those years ago. And, over time, especially if they are putting together like a dollar cost averaging type of, strategy to their Bitcoin allocation, it just becomes very obvious to them that, hey, this is working. Like Trey's not a crazy dude, which is very nice to hear. Not that I really care. Like it's pretty obvious that it's worked for me. And so, to each his own on that front. But yeah, it's nice to be vindicated for sure.
So traditionally with FI, it's what you said. People are just going to stack stocks and they're going to do low index funds. And then when they get 2 million, 3 million in the bank, then they're going to do what was traditionally called the 4% rule. And I've seen you tweet about the 4% rule. Can you first of all break down what that is from like a TradFi lens and historically what that was? Because, like if Trey in the 80s finds out about FI, he's probably doing the 4% rule. He's probably just putting it in an index fund because Bitcoin doesn't exist. And he's taking the fastest train that he thinks he can take. Obviously, now fast forward, we now have a faster train that's called Bitcoin. But talk to me about the 4% rule, the historical nature of that playing into FI, and then whether you think that exists or if it doesn't exist, why doesn't it exist anymore?
Yeah, the 4% rule is a pretty well-known metric for identifying that point where you have reached financial independence, that point where your portfolio can support the expenses that you have. And the way that it works is that you take whatever your annual expenses are and you divide by 4%, which calculates to some number of a couple of million for most people, for how big your portfolio needs to be to support that spending. And so what this comes out to is for every what is this, $40,000 of expenses that you need or that you have, you need $1 million worth of a portfolio to support it. And you can draw down 4% on that 1 million to cover your $40,000. So the inverse of this calculation of dividing by 4% is to just multiply your expenses times 25x. So when you reach 25 times your annual expenses, you are financially independent. Your portfolio can support you in all of your expenses. And you do that by drawing down on it, by selling 4% of that portfolio, those assets over time. And historically speaking, the way this has worked out is that you never run out of money over at least a 30-year time horizon, but even a lot further. And in fact, in most of the cases, historically speaking, you would end up with a lot more money than what you actually started with, because of the compounding nature of that portfolio. And so this is what I was saying earlier, where your balance sheet actually is so much more powerful for you than your income statement, than the revenue that you're bringing in from your job, your income, because at a certain point, it starts to generate much more wealth than you could ever do by just working a job, by having an income. And so that's what I mean when I say that your job is really to take that income and to buy assets that will compound in a way that that frees you from having to have the job in the first place. The 4% rule came from something called the Trinity study, which was done back in the 90s, and it was looking at over 100 years of stock and bond market data. And it was basically testing like, what is the appropriate amount of assets that are needed to support a lifestyle. And you can go look this up, but the long story short is that's where the 4% rule came from. Well, how does this apply to Bitcoin? Well, the 4% rule was based on a mix of stocks and bonds, and Bitcoin grows a lot faster than stocks and bonds. And I expect that will happen over a very long time horizon. Will it grow as fast as it has, historically speaking, in the first 15 years? Probably not, right? Rule of large numbers. But that doesn't mean that it's going to slow down to the rate of the stock market at, call it 10% per year. It's probably going to grow faster than that because it's perfectly fixed in supply and because it's undergoing an adoption cycle right now that is probably going to last for another 10 or 20 years until we start to reach the upper part of that S curve adoption. And so what that means is that the compounding rate that you have when you own Bitcoin is going to be a lot higher than, call it 10% in the stock market, which also means that you can draw down on a portfolio of Bitcoin at a higher rate than 4%. So I wrote something in my newsletter that asked this question: is the 4% relevant to Bitcoin? I think it is, although it might be more like 5, 6, 8%, 10%, something like that, in order to still be conservative, but be able to live off your Bitcoin. What that also means in terms of the amount that you need to save is that it's a lower threshold there, right? If you divide by 10% instead of 4%, well, now all of a sudden you need a whole lot less in that portfolio in order to be able to sustainably live off of that compounding that is happening there. So that's how the 4% rule works. I still actually use it, and I don't know. I have a lot of like probably interesting takes to people around things like emergency funds and mortgages and all this kind of thing. But when it comes to like just my own peace of mind, which is another thing that I kind of make fun of people and poke fun of people with, I like to just be conservative. So I still use that 4% rule, even though the vast majority of my portfolio of assets is Bitcoin, and it's growing at a much higher rate than the 9-10% that's out there.
That was a really great explanation of the 4% rule, and I'm glad that I asked you because I was going to try to do it, and I'm like, no, I'm just going to serve this up to Trey and let him try. The reason why I ask you is a couple of things. One, yes, you've touched on it, right? Bitcoin is going to be a vehicle that's going to grow faster historically. Even if it slows down from the first 15 years, it's still going to be, orders of magnitude greater than what the stock market should return. And knowing that, I also wanted to there's the other side, which is the fact that with inflation and currency debasement, I think you're going to just need more dollars to get more things in the future. So I wonder how that plays a role in your thinking. And then when you sit down with people and you talk to them about these things, and when you write about it, does the 4% rule still work? How does currency debasement and inflation play a part in your thinking?
Yeah. So actually, the Trinity study takes inflation into account. Now, does it use the proper metric for inflation? Probably not. We kind of all know that inflation is not what CPI is. It is much higher than that. It's probably closer to like 7-8% on average, which is right around where the M2 money supply grows on an annual basis. And you can see this in things around you, right? Like you go to the grocery store, sorry, but your eggs are not growing at a measly 2 to 3% in price. They're growing a lot faster than that. And same thing for healthcare and education and the cost of living in certain parts of the country is going up a whole lot faster than the 3% CPI readings that we've been seeing. But the Trinity study and the 4% rule does take into account at least some portion of that inflation that is there. And the reality of the situation is that, forget about Bitcoin for now. If you're just using stocks as your asset of choice and you are following a FIRE framework, those stocks are going to grow at a faster rate when there is more inflation, just because the value of those stocks are very closely tied to the amount of money that is out there, to the growth in inflation, and it's going to reflect that. It's going to reflect that. So you don't necessarily need to take that into account. It's already kind of baked into the calculation that is part of the 4% rule.
I love that. Do you actually know of any tools that one can use to figure out what their Bitcoin number was? Because I was doing some math, and it's just kind of I think when Bitcoin hits $1 million, then and it's still probably growing at 15 to 20% a year, then obviously, yeah, if we're on the 4% rule, then you can definitely take more than 40,000 and you're probably still good, even if you're paying long-term cap gains or whatever, you're probably paying long-term cap gains on, depending on how your tax structure is. How do you think about that? Like, because I love what you said. You're like, look, maybe you can even take 10%, right? Maybe not even just 4%. So if you can take 10%, and you need the 40,000, then instead of even needing 1 million, you only need 400,000. So you need a lot less Bitcoin moving forward. How do you, someone comes to you and they're like, okay, Trey, I'm already FI, but I'm so deep in stocks. How do you kind of bridge that gap, with people that are in stocks and getting them into Bitcoin? Is that the conversation? Like, hey, instead of having $1 million to get 40,000, you just actually need 400,000 to get 40,000. How is that received?
So in answer to your first question, is there like a retirement calculator? There's a bunch of things out there. I'll point you and your audience to Unchained, to unchained.com. We've got a retirement calculator that's out there that's kind of tied toward another financial services service that we have, which is a Bitcoin IRA. And you can play with all kinds of the different variables that are out there for your personal, situation, whether it's like your allocation across, stocks, bonds, Bitcoin, the amount that you are saving, the amount that you expect Bitcoin to grow on a day-to-day basis or a yearly basis. You can plug in different models for Bitcoin's price as well to just make some of that calculation easier for you. It's a really cool tool. Go check that out. In terms of the conversation for people who are maybe already pursuing FIRE, but they're using stocks exclusively as their asset of choice, but they're kind of interested in Bitcoin, my suggestion is to take some portion of the dollar cost averaging that you're doing, or the kind of weekly or biweekly or monthly allocations that you're making to that savings portfolio, and peel off a portion of that. Maybe it's 10%, maybe it's 25%, maybe it's half, and keep stacking your stocks, right? But start stacking Bitcoin alongside of it. Instead of, selling down your stocks to buy Bitcoin, that's ultimately the best move from just like a pure numbers standpoint. But you're not typically going to be able to do that if you're kind of new to this idea of using Bitcoin as a primary savings vehicle. It's probably easier to just, split your ongoing savings in two different directions there. And then over time, typically speaking, what happens is that people gain a lot more conviction on Bitcoin, and they'll start wanting to do more. And then at a certain point, you might decide, hey, I'm just going to like sell all of this stock and buy the Bitcoin, or sell half of it and buy more Bitcoin, because you want to have more exposure to that higher growing asset. And then there's a whole bunch of other benefits that Bitcoin gives you that you can't get with the stock market, right? Like, we could go down this rabbit hole if you want, but there's a sovereignty aspect to this. When you're buying actual Bitcoin and you're holding your own keys to it, there's one weakness in the FIRE approach when you're using stocks, is that you're fully reliant on the financial system that is out there. You're fully reliant on access to your money. And you can put whatever handicap you want on the scenario where you're not able to access that money that you've worked so hard to save, even 1%, 2%, 5%, whatever, like a 0.5%. You can handicap that however you'd like. But it's not zero, right? There are all kinds of different scenarios that could come to play where you have lost access to your wealth, either permanently or for a period of time. But you don't have that problem if you own Bitcoin and if you're holding your own keys. And so think of it as a little bit of a hedge or insurance type policy to at least have some Bitcoin that you are in sovereign unilateral control over, that's sitting next to your stock portfolio, that you just can't go to that next step. You're always going to be dependent on the financial system for access to that. And I don't know if you've noticed, right? But like, things are a little hairy. They're a little dicey out there these days. There's a lot going on in the geopolitical world. And there's this kind of reshuffling that's happening across the globe. And we don't really know how all of that's going to play out. We don't know how all of the, you know, development that's going on with AI is going to play out. There's all kinds of unknown factors out there. And when you own some Bitcoin, some portion of your wealth is in Bitcoin, you control it directly, you can operate completely outside of the traditional system that you have only permission to access to. So it's something worth considering. I don't normally talk to people about that, at least not at first, right? Because people who are coming from the traditional financial mindset or the traditional FIRE approach, it's just not even on their radar that that's a possibility, right? They've got very high trust in the system. And, you know, despite all of the crazy things that have been going on, like ultimately the foundation of their strategy still needs that system to be in place and functioning. And there's just too much of a emotional barrier to get over if you just introduce that too early. Over time, though, of course, like it's kind of natural if you're studying Bitcoin and you're starting to understand what money is and why this is such a valuable tool. The questions are going to arise. Well, okay, if Bitcoin enables this, well, why is that a good thing? And what it actually is it protecting you from? And then if you start looking for the signs of what those risks are, you're probably going to find them. It's not, you don't have to dig too deep to start seeing the cracks in the foundation of what has been a long-standing, powerful tool in the traditional financial system. But that doesn't mean that it's always going to be there, or that it's always going to be there in the form that you expect it to be. If you're talking about, 20 years down the line.
I want to continue on this sovereign piece because I think it's super important, and I do think it's like 5 steps down the rabbit hole from like FI with Bitcoin. But I have a question, and I was talking to people. I'm like, hey, I'm having Trey on, and we're going to talk about FIRE and Bitcoin. And this is a question from a guy who's 22 years old. I am an assistant soccer coach for a D3 college up in Massachusetts, and he's a finance major, super smart kid, and he asked me about Bitcoin. It's interesting that all those kids own something, even if it's like $10 in XRP, and they're like part of XRP Army. Like, well, I'm like, cool, like whatever, just go in, learn about it. If it's not a W, it's a lesson, right? And so this is a question. He says, and it goes back to the retirement and the allocation essentially question, and then I have 2 questions there, but let's start with this one, and then we'll get into sovereignty. I want to continue with sovereignty because that's super important. When planning for retirement, what % of allocation, and really it's early retirement, that's like the context of our conversation. So when planning for early retirement, what % of allocation would be in BTC compared to stocks and bonds? Now, you've just given this away. You've said it would be better if you just converted, sold off all your stocks, however your strategy is to that, or a large chunk, and then got into Bitcoin. But if you just meet someone on the subway and you don't have time to go down the rabbit hole, and there's a 22-year-old kid looking at you and being like, wow, this guy works in Bitcoin, he must have the answer, and he used to work at Goldman Sachs. What is the answer you would give him in the 30 seconds so as to not dissuade him, but incentivize, a forward-looking, maybe heavier Bitcoin amount than he would think to allocate?
Yeah, I think for a short 30-second answer here, what I would say is see if you can think about where your conviction level lies on Bitcoin on a scale of 1 to 100. And if it's 25 out of 100, then do 25% in Bitcoin and 75% in stocks. If it's 50, do 50-50. If it's 75%, do 75 and 25. Just think about where do you lie on your conviction that Bitcoin is going to be here in the form that we expect it to be in 20, 30 years, and that the growth rate will continue to outpace the stock market, and that you've got some benefit that you might get from sovereign ownership of your wealth. Plot that on that graph and then allocate accordingly. You don't have, this does not have to be an exact science, right? Just do something that will allow you to get some exposure there to Bitcoin as part of that savings portfolio that you're getting started.
That's a phenomenal answer. I will not only clip that, but steal that, but always give you the rights to that and say, Trey said this. Going to your own experience, because I think when you can talk about your own experience, it just makes it so much better, right? You had a bunch of stocks, or you had stocks, let's say there was a point where your entire portfolio was 100% stocks. I don't care if you had $5, but it was 100% stocks. how did you wean into Bitcoin? Did you just have a day where you sat down and you're like, you know what, 30%'s gone. Like, I feel like I've got good returns on this. I'm going to take 30% off the top, and then I'm going to start DCAing down the rest of my stocks and putting it into Bitcoin. How is that for you?
I did what I was talking about earlier, which is that I just took a chunk of what my normal contributions were to that stock portfolio. I
So
just
you didn't
carved.
sell. You just started to
No, I
DCA.
just started to DCA in the
Okay.
Bitcoin direction. And then over time, that, started out with a small portion of it, maybe 10%. And then over time, as I found conviction in Bitcoin, it became 100%. So that advice that I'm giving your friend, your 22-year-old friend, that's exactly what I did. I
Okay.
took a small portion, and then over time, it just ramped up to 100%.
Okay. Okay. But you never sold the stocks. Probably there's
I,
tax implications there
I
too.
still have stocks as part of my portfolio. I do not have 100% Bitcoin. I would have had 100% Bitcoin, but I am married, and so there are considerations there. I like my
Sure.
wife. I want to stay married, but I'm kidding about that to some degree. But you know, she's definitely been very supportive of me and this approach, so I can't complain too much.
I actually wanted to ask you about that because I have I only have, sorry, many. I have like 4 or 5 people in my life who I can talk FI about, right? Because FI is something that it can be very disruptive for people. First of all, talking about money can be super disruptive. Then talking about like money planning is very disruptive. Then talking about being so disciplined on a level week in and week out, thinking about 10 years down the line or 5 years down the line. It's been a tough conversation for me to have with many people, but there's 4 or 5 people that I can talk about that with. And one of the things they say is their partner is always a interesting ingredient into that conversation, right? Because my buddy will be like, hey, let's say we just got like a couple $1,000s in the door from something that, the universe gave us a couple $1,000. He's like, wow, if we just put that in and it continues to compound, we just save 4 months in 10 years. But maybe his wife will be like, hey, actually, I want to take that money and want to go on vacation for a weekend. And we're going to go blow it all. How has that conversation been with you and your wife? From what I've heard in other episodes, it sounds like you guys are a team and are looking downfield and are playing the same game. But do you ever run into different theories about that in relationships, and how do you like, what's your advice there?
Yeah, it's obviously super important to maintain alignment in an approach there. Like, this is a team game. If you start going your own way and say to hell with what you think, that's going to cause much bigger problems. And talk about not having much Bitcoin, right? If that ends, if a lot of divorce happens from money problems, right? And
For sure.
you're going
For
to end
sure.
up with a lot less Bitcoin if you've got to split that up in half. So if that's the only argument that helps you to start to see eye to eye with your wife, then or your partner, then let that be the one. In all seriousness, there are different parts of this journey. Especially when you're young and you're just getting started, really age doesn't matter that much in what I'm going to say. But because we're speaking about a 22-year-old friend, in the prior answer, I'll kind of gear it toward there. Like, at that point in your life, you've got so much time ahead of you, and you also have so much opportunity for just being very aggressive in saving so that you can set up the rest of your life much earlier on in a way that is much more financially independent. And so taking advantage of those earlier years and getting that compounding working for you is really, really important. One of my newsletter posts is called the stacking sprint. And I run this thought experiment basically and run some numbers behind it to basically say, look, because of the way that the compounding mechanism works, if you take a 4 or 5 year period and you just ruthlessly stack, you are like very, very conscious of your spending. You're ruthlessly stacking. You're stacking as much Bitcoin or stocks or some combination as you possibly can in that 4 year time horizon. You can then start to let off the gas, because the work that you do going forward is going to have a much less marginal impact toward the future prospects of your wealth than what those first few years actually bring you. And so if you can just be like very, very intentional in those first few years, then you're setting yourself up for success without having to continue with that level of intensity over a much longer period of time. And at that point, you can start to actually enjoy your income a little bit more, right? You can start to spend a little bit more. You can start to do those vacations and all of that. And a 4 or 5 year period is not that long of a time to really sacrifice. Now, you should come to an agreement on this type of an approach with your partner before you set off on this. But that's a way to kind of time box it, or to put like a very strong structure around a plan that will feel like, hey, there's an endpoint to doing all of this. And once we reach that endpoint, at that point, we can start to really like loosen up a little bit on the plan. So that's how I tend to talk to people about this. It's like, you should be able to enjoy your money and your life while you're young. That's the whole point of FIRE. And actually, you don't have to wait until you reach this magic number of 25 times using the 4% rule or whatever you're using. You don't have to wait until that exact moment, because that balance sheet that you've built, in a large number of cases, it will carry you on without much extra effort. But you do have to at least put in that initial effort to build that compounding machine and get it working for you.
That is a great answer. And I think that that's one of the pitfalls of FIRE, at least with my own journey, maybe yours as well, is that when I started and I was just, plugging away, as you said, I was in that 4 or 5 a year time box. I in the example and the hypothetical I gave you, where like all of a sudden like a couple $1,000s comes in my life, I was just putting it away. And I look back now and I was like, you know what? I should have taken a quarter of that and had fun with it. I don't even know what that looks like, but like force myself to have fun with it. The other interesting thing in the conversation I'm having with, he's a senior on the team, and we're talking to, and he's very cognizant of AI. And there's a lot of people like Raoul Pal out there, who's, the macro investor. He talks about how like you have till 2030 to, I'm going to say a bad word now, so cover your ears if there's kids in the car, to unfuck your future. We've talked about that too. And, he's a 22-year-old kid. He's going to have like a business BA, finance degree. But one of the things he said to me is, while he feels young and like, he said these things, I know I'm young, but there's the but. He's like, what's going to happen with AI? And you've touched upon that. You're like, hey, it's a hairy world. We don't know what's going to happen with AI, right? We don't know what quantum is going to bring to productivity and the relationship between productivity and labor. And I talk a lot about on my personal X and on Instagram about how like when you separate productivity from labor, it's something we've never done before in human history. And all of a sudden, when you don't need human beings to have GDP go up and all these other things, like we're going to have a world in which you're going to have 6% unemployment, but you could have 8% GDP growth one year. Something that impossible 100 years ago. Someone would say, what do you mean? Like that's not going to happen. So in that world, he both feels like and then I'm reading between the lines, and he'll listen to this and be like, Coach, you're wrong. But like, it's like, yes, I have time, right, in this hand, but also, holy crap, I have to get my finances together because I don't know if AI is going to take any possible job I could have. And he's going to be going into a labor market in the next 9 months where it's just bleak, right? So I think for Gen Z right now, thinking about the younger Gen Zs, thinking about FIRE is a very, very interesting thing. So building on that, do you talk with many, college age kids? Do they reach out? Do they DM you like, hey, Trey, I love what you're talking about. I'm a Bitcoiner. I want to get FI. This is what I want to do. And if you do, or if you don't, how does that feel for you? Like that I have 5 years to figure this out because AI may take all potential future job. Because as we've talked about, the job is the revenue, the personal revenue that you use to then stack assets. And if you don't have that revenue, I think it gets a little bit more complex.
Yeah, I think you're right. Nobody knows how all of this is going to play out. What I would say is, first of all, it's not there yet. So take this as your cue to start your stacking sprint right away. I am generally optimistic, though, that these things work themselves out, that AI is not going to just doom everybody just sitting on the couch and there's nothing we could do. There's certainly going to be large portions of the economy and the jobs that are out there that are going to be impacted by this over time. And your job is to try to understand the tools, use them to the best of your ability to make yourself more valuable, so that you can be in a position to take advantage of the new opportunities that will come from having these new tools. It's kind of a Jevons paradox type of thing where the more capacity that is available for productive means, the more will actually be created and the more opportunity will be created from this. So I'm definitely not a doomer when it comes to the AI side of this equation. And there will always be opportunities to be able to create an income for yourself. And we probably are going to, there's a good possibility that we see some kind of UBI and all that stuff. They're going to have to print a lot more money in order to offset the deflationary effects of the AI revolution here. And that all of that extra money is going to go, not all of that, but a good portion of that extra money is going to go into Bitcoin and cause its price to go up even higher than you would imagine, right? And so again, your job is to figure out a way to be very flexible in your approach to making money, to turn that money into assets, and those assets will take care of the future years that you might be concerned about. I had one other thought too. Maybe we can come back to it, but I just lost it.
It's okay. We can come back. And I actually realized we're almost at the hour mark, and I need to be respectful of your time. But I also have a couple more things I want to ask. I want to go now back to the sovereignty because I think that that's super important, and that's something that's different. Because one of the ways that I recently was explaining Bitcoin was like, it's a stock that is desired globally that you can use to buy things. That's the way I think about, like, it's a super simple idea of Bitcoin. Whereas like you could have $2 million of Tesla, Trey, and you come down and all of a sudden you're locked out of my apartment in Colombia and you have no money. But if you have Bitcoin, you're much closer to like figuring out a touch point with someone who's going to be like, oh, he does have value. I'd like to he can stay in my hotel. We can figure this out. Right.
Absolutely.
So sovereignty wise, do you have an anecdote of someone who you've seen the sovereignty angle of Bitcoin just really kick in where it's like, wow, it saved me?
Okay. So the story I'm going to tell is a reaction to people not having sovereignty and then realizing that they needed to. And I've got a client and a friend at Unchained who runs a SaaS business, an AI SaaS business actually. And he was the business was a client of Silicon Valley Bank at the time when SVB came under pressure because of their, let's just call it balance sheet misallocation toward treasuries, that risk-free asset. And what happened was their cash was there. Silicon Valley Bank basically went under because they bought a whole bunch of long duration treasuries that got hammered when the Fed rapidly increased rates. And the bank was like insolvent and closed down over the weekend. And none of the clients of SVB knew how this was going to play out. And they didn't know if they were going to be able to make payroll for their businesses, and they didn't know if they could pay suppliers and do all this stuff. This particular person reached out and said, Trey, this is my opportunity to orange pill my board. Because he is already a Bitcoiner. His personal balance sheet was already in Bitcoin. But this was an opportunity to help the board of the company understand the importance of the company itself keeping a Bitcoin treasury and actually holding their own keys. And that's what they have done, which has turned into an incredible run for them as well, right? If we're talking about when SVB, this whole episode happened, I think it was in 2023. And since then it's been, nothing but a kind of melt up in Bitcoin prices. So it was really good timing there for that type of an allocation. But it just goes to show that, when and we were talking about this a little bit earlier, if your FIRE approach relies exclusively on access to the assets that other people control, that you have basically an IOU to, there are certain scenarios where you can't access those assets, and you just need to at least have a hedge.
I love that story, and it makes me think of a couple things. One, random question: are you an NBA fan? Or you said Indiana, so does that mean you're a Pacers fan?
I am not much of an NBA fan. I went to the Hawks season
Okay.
opener the other day, actually, which was the first time that I'd seen the Hawks play, and the first NBA game that I've been to since I was a kid. I grew up, I guess, kind of as a Pacers fan because I grew up in Indiana. I did see them play the Celtics way back in the day, like in the '90s. I think Robert Parrish was still playing there. Man, that was a lot of fun. That was like Reggie Miller, Robert Parrish playing each other, and that was a fun game. But I was like 9 or 10 when I went to that.
Yeah, you were a kid, and the reason why I ask is this is something that's always interesting to me because Antetokounmpo is from Greece, and when he came over to the States, he talks about how because he came from Greece where they've had all these banking crises, when he came over, he got like a CPA or a lawyer, he got some financial person to basically help him out and understand the U.S. system, and he got his first bonus check. I don't know, let's call it $10 million. And he then divided it up into 40 different bank accounts. So it was all under the $250,000 threshold for FDIC coverage because he was so freaked out. Even though he was in the US, he was like, I've seen this happen before. If it can happen in Greece, it could happen in the US. And I constantly think about that when I think about
Yeah,
like bank runs and SVB. And SVB was actually a time in which many people in my Bitcoin cohort, we all bought a bunch of Bitcoin. Like when we saw that go down, we're like, oh, this is going to be great. And then Bitcoin went from like 19.5 to about 30,000 in like 2.5 weeks.
yeah,
And the direct correlation was like, holy crap.
yeah.
So anyways,
That was such a signal right there,
such a
right? You
signal,
see a
such a
banking
signal.
crisis in the US happening, and Bitcoin doesn't crash, it goes
Mhm.
up, right? It's seen as a safe haven in those types of scenarios, which is exactly what it is. And I remember I told you I was aware of Bitcoin going back to 2011,
Mhm.
but I remember the Cyprus banking issue where they had
Yep.
that bail in back in 2013, and remember Bitcoin, like that was maybe my second touch point with Bitcoin, right? Like before I really started to understand it, was seeing that whole crisis play out, and the reaction in Bitcoin was that it went much higher, right? Because people started to realize, oh hey, I can't trust the banking system, but I can trust this Bitcoin.
100%. And I just, when you brought up Silicon Valley, I was like, yeah, that was crazy. Cause in 2 weeks it bounced basically 50% by going around 20,000 up to around 30 in 2 to 3 weeks time. Somebody will fact check me on that. Couple last things. One of the things I wanted to ask, cause like when it comes to FIRE, we've talked about the 4% rule and we've also talked about basically a stock allocation, right? Couple of people I know that are FI are real estate and they have doors. They're like, yeah, I've got this many doors and now I don't have to do anything. So they're more cash flow people, right? What has there ever been an argument that you've come across, whether it's a stock argument or it's an allocation argument? And I think we almost have to suspend reality. We have to take out the idea of sovereignty a little bit and like control over asset. But has there ever been an argument that you've found to be compelling to think about FI now not on a Bitcoin standard? Is there anything that you've come across? And I say this because I think as Bitcoiners, it's really important that we constantly are open and challenging ourselves to try to find the narrative that changes our mind or gives us a different perspective.
So I think there are a lot of ways to make money in the world. Real estate is one of them, and it is kind of the secondary approach that the fire community takes for their savings approach, is not the stock market, but real estate, or having some combination there. For me, real estate is something that is too illiquid, too levered, and too much work to mess around with. I think like if you are a real estate investor, you are running a business, and that comes with a whole lot of headaches and a whole lot of transaction cost, and it's kind of can become a full-time job. Now obviously you can get to a point where there's some type of mailbox money, but it's never just a set it and forget it type of endeavor. You're always going to have issues. You're always going to have tenants calling you or property management companies calling you on behalf of tenants. And then when you want to get liquid, you're either going to have to go through the banking system to borrow money against your asset, or you're going to have to sell it. And if you sell it, there's going to be a massive like 6% transaction cost that's coming off the top. There's a lot of tax benefits to owning real estate, but it's also like you're getting so much headache to just get those tax benefits. For me, I like to think of things this way, that owning liquid assets like stocks and like Bitcoin gives you a lot more freedom over your time, which is ultimately what you're going after, than does owning real estate, because real estate is much more hands-on. Putting Bitcoin aside, if you're just stacking VTI or the S&P 500, you have no tenants calling you, you have no leaky roofs, you have no like stopped up toilets, you have no, eminent domain to deal with, property taxes, lawyers, real estate agents, all of this stuff is like, that's a lot of work. I don't want any of that, right? I'm doing this because I want to have more time. I don't need another business or a job. And so that's the way that I approach that from my own personal perspective. If you think, if that is your business, you can definitely do very well at it. But again, like I would argue that your work is meant to be moving, like your job is not a real estate investor. That's your work. Your job is to move that value into liquid assets that you can actually then start to live off of without any like additional work associated with it. So that's my approach. That's how I think about it.
Yeah, I think that's a great answer. And I think one of the key words there is liquid. A lot of people in real estate, whether they have doors or even if they have a mortgage, they don't understand how illiquid it is until they go to sell it. And then they realize that the price of real estate, this is the most fascinating part about real estate. I was two questions away from getting my real estate license back in 2019. But one of the most fascinating things I learned in that process was that the value of a home or the value of any real estate is not what the market says it is what a buyer will pay for it.
Yeah.
And so that
I was just a buddy of mine that I went to this Hawks game with is a very successful real estate developer in the Atlanta area, and he's very wealthy and he's done very, very well. The whole conversation was around liquidity issues. Yeah, it's like always got a cash issue, always got a liquidity issue that he's dealing with or whatever, and he loves it. Like he loves this game, and
sure.
That's great. Good on him. By the time we were leaving that Hawks game, he was very much intrigued by the idea of Bitcoin. He's like, you're basically telling me I should sell all of my real estate and buy Bitcoin. I'm like, hey, I didn't tell you what to do, but it feels like you're coming to this conclusion.
Yeah, exactly. And it feels like this exact conversation you had is the exact conversation Gary and Grant Cardone have anytime they hang out for longer than 15 minutes.
Yeah.
And Grant is slowly selling not slowly, I mean, he's selling hundreds of millions of dollars, which for him may be small in a $20 billion portfolio. But like there is a future in which Grant Cardone is just a full on Bitcoin maxi. And he's like, yeah, why would I not?
I have quite a few clients at Unchained that are real estate developers or investors who are selling down all of their portfolio to just buy Bitcoin because they just realize that it's superior in so many different ways.
From a time and energy standpoint, I think it's untouched when you compare those two. You actually have a tweet, and I'm not going to show you and hold my phone up as though I were a boomer or someone older or someone who doesn't know how to use technology, only because the photo is kind of explicit. But you shared this 5 days ago, and it said real estate is a, quote, shitty investment.
Oh, yeah.
And it is a picture of a toilet that is overflowing with what you can imagine. And it's someone just saying, like, I'm done with rental properties. I don't want to do this anymore. I don't want to get a call in the middle of the night that someone was putting, I think it was wet wipes or something in the toilet that caused it to back up. So anyways, it's
well, and a lot of the like FI people will talk about real estate as their like way of reaching, financial independence and all of that. And they start with these single family homes. Well, like I'm not saying that you can't get wealthy and get financially independent from doing that, but especially when you're first starting out and you have no experience, it's extremely risky. It's extremely risky. You are levered sometimes like, 20x, 30x, 50x. If you're putting 5% down on a single family home, you're levered 50x. And you at the end of the day might take home $200 a month after all of your expenses. That that assumes that you have done a good job and actually bought a property that can cash flow for the time being until perhaps the tenants wreck the place or fill up the toilets with baby wipes before moving out and taking all of the appliance with you. So all of that $200 a month mailbox money that you've been getting can go up in smoke like very, very quickly. But in order to actually get to a place where you are financially independent, you've got to do that many, many times. You can't just retire on $200 a month, right? You've got to do that and build a full-fledged portfolio. Well, it's a full-time job to be able to deal with this. And early on, it's very, very risky. And I think a lot of the influencers and the fire people who are pushing that idea or a path on people, they downplay how risky it actually is. I would rather take no risk or very little risk at all and just buy Bitcoin instead of doing this like tons of work for $200 a month in cash flow. And then the other thought or idea that maybe I'll leave you with is like the way that I think about the game that should be played is that we should always be pursuing total returns instead of pursuing income or cash flow. That income and cash flow today always comes at the cost of total returns in the future. And that especially when you're young, you should be going for the largest value of your savings portfolio, that liquid net worth that you're trying to build as possible, and foregoing dividends, cash flow, income that is coming from your assets. Your income should come from the work that you do that is then funneled into assets that are growing at the highest total return that you can get. And then what you end up with, if you pursue it that way, is a much larger wealth at an earlier period of time that you can just draw down on. And you can create that income that you need by selling down. And you're not a forced seller like you are if you are buying dividend stocks. You're a forced seller every month or every quarter whenever they issue those dividends. And they're issuing those dividends because they've got no better use of those funds. So you're trading an asset that you would like to have go up for cash now that's being devalued at 7%. It just doesn't make any sense to me. I've done a lot of writing on that in the newsletter as well. So you guys should go check that out.
I have more questions, but I also realize I could ask you questions till 9 p.m. tonight. So that is a great way to kind of wrap up this. And I'm going to go ahead and I'm going to put all of the links to where people can find you, also to your newsletter, and also definitely to Unchained so people can go check that out. I need to go check out that calculator because if you have something that's on the Bitcoin standard talking about when you'll be able to find financial independence, I absolutely need to check that out. If you're listening to this on YouTube, please go ahead and subscribe. Listening to this on a podcast platform, please subscribe and check us out at Future Signal, XYZ, all of our socials. Trey, this has been wonderful. Thank you so much for hopping on the pod.
Jarrett, it's been awesome. Thanks for having me. I'd love to do it again sometime. Just let me know.